The U.S. financial markets took heavy hits Monday as investors grew increasingly uneasy over trade disputes and mounting political pressure on the central bank. Sentiment deteriorated after President Donald Trump blasted Federal Reserve Chair Jerome Powell and revived speculation that Powell might be removed. Uncertainty over economic policy and perceived interference with monetary independence triggered broad volatility in equities and currencies. Major Wall Street benchmarks logged sharp drops. The Dow Jones Industrial Average slid almost 2.5%, while the S&P 500 and the Nasdaq Composite fell 2.36% and 2.55%, respectively. Technology and consumer discretionary names suffered most, with Tesla, Nvidia, and Amazon absorbing heavy selling. The rout underscores how vulnerable high-growth sectors remain to macro shocks and political turmoil. Losses were not limited to stocks. The U.S. dollar plunged to a three-year low as global investors sought safer havens. Gold surged to a record above $3,500 an ounce, reflecting widespread caution and risk aversion. These moves indicate investors are hedging against possible long-term instability in U.S. policy. Market jitters intensified after Trump escalated attacks on the Fed and its leadership. In repeated remarks, the president mocked Powell and demanded steep rate cuts to ward off stagnation. The renewed verbal assault has again cast doubt on the central bank's ability to act independently of political influence. Reports also surfaced that Trump is weighing options to oust Powell before his term ends in 2026. One floated contender is Kevin Warsh, a former Fed governor linked to Wall Street and known for favoring more conservative monetary stances. Warsh has warned against eroding the bank's autonomy, yet his alignment with Trump's outlook makes him a plausible successor should a vacancy open. The friction between the White House and the Fed has revived a wider debate over central bank independence. Economists caution that persistent political meddling could undermine confidence and blunt the Fed's policy tools. Some fear parallels with the United Kingdom's 2022 crisis, when unworkable fiscal plans triggered a market rout and forced a leadership change. Powell remains adamant about defending the Fed's autonomy. He has stated the institution's legal independence is intact and pledged to finish his term. Yet those assurances have not fully calmed investors amid the charged political backdrop. The U.S. sell-off spilled into global trading, though with milder impact. Japan's Nikkei posted modest declines, and Chinese blue chips even advanced, suggesting capital may be shifting from U.S. assets to steadier overseas markets. The move signals both anxiety over U.S. policy paths and the comparative appeal of Asian markets amid Western uncertainty. Analysts warn that continued tariff battles and abrupt shifts in monetary leadership could compound existing global economic complexities. Prolonged political intrusion into central bank decisions may add unpredictable layers to an already fragile environment. In sum, escalating trade frictions and intensifying pressure on the Federal Reserve have placed markets at a delicate crossroads. Confidence, already strained by global instability, now faces further challenges as policy direction appears contested. Preserving the Fed's independence and communicating clear, coherent objectives will be vital to sustaining stability and preventing deeper fallout.